Hello traders, hello everyone. Welcome to a new trading week. How was your weekend? Everything fine? I'm just putting my phone on mute. Just a second. Okay, put it away. Okay, here. So this weekend after a month or so, I was skiing with my son, and I miss summer so much. I mean, we have seen the sun after 1 month here in Slovenia, so I really cannot wait on some warmer days. Actually, okay, I can see that there's a lot of commentaries coming from YouTube. All right. Okay, so it seems like YouTube is working fine as well. Okay. Okay, so what's going on? Well, it should be quite a busy and important week. We have plenty of important data. Firstly, there will be rates decision from Australia. Then we have Powell testimony. Then we have Bank of Japan, Bank of Canada decisions, and also non-farm payroll report on Friday. So closely closely watched will definitely be Powell. Okay, so we will see if he will try to be very hawkish, or maybe we'll keep the same language as before. If he will be hawkish, we know what that means. Markets are already showing some very nice dollar strength. Of course, this, even if he's hawkish, there can be some moves already priced in, so it will be very challenging this week. We have also seen a very nice rebound on stocks on Friday, and normally when you see very strong recovery on Thursday, Friday, and then close at the highs on Friday, like this time, usually that's very bullish signal, at least for Monday or Tuesday session as well. Okay, so I'm aware of potential more upside here in the short term. However, on looking at the big pictures, I'm still really not sure if we are completing this kind of a corrective phase. Let me just hide this for a while, because after all, we are still just trapped in this range here. So it's really, I mean, I cannot say if correction is finished if we are still just jumping between these important levels. So for now, I will still consider that potentially wave B could retest 3800 area, and then we see a bounce. But in the short term, as I said, today, tomorrow, we could see potentially more upside. Looking at this chart here, actually not this one, this is what I want to share. You can see that we have very nice rebound here. Potentially that's an ongoing impulse because it's a very strong move. What I also like about this current recovery is that if you look or compare the previous rallies, okay, you can actually see that the latest one broke decisively above several swing levels, and normally this breakout suggests that trend has changed, even if just temporary. Notice that despite that 5 waves of recovery here that occurred in mid of February, we haven't seen a break above these previous swing highs. Okay, but this was a massive break above multiple swing highs. So normally that's a very nice indication that trend has changed. Of course, this can be just a temporary move, but the important is that we have this impulsive quality from the recent lows. So even if, let's say, in the following week or after Thursday, Friday, we will again turn to the downside, well, I still think that there is for now room for more gains, because even if the current recovery will be corrective, it should be made by 3 waves. Okay, so I think that there is room for slightly more upside. Also, we have seen some bounce on bonds as well. US yields are slightly coming to the downside. Also, if I show you the next chart, which will be on dollar index, I'm actually looking at here at equal weighted dollar compared to euro, Japanese yen, and Aussie and pound, and you will actually see okay, here that we have on US yields, we have a very nice reversal to the downside, and that occurred at the end of last week. At the same time, we have seen a bounce on stocks. Okay, so the US dollar really didn't have seen much of any strong decline, but because of these two below, I think, or I am aware of potentially more complex wave B here. Maybe we can even retest the highs and then come to the downside, but I'm just aware that we could be here dealing or trapped in in some kind of a flat correction. So overall, I still think that this dollar rally that we are tracking since February is maybe not finished yet. We could be in the middle of this recovery, but still the first resistance was very close here around 105.80. Then you have the 38.2%, a little bit higher, and more important could be the 108 level. So for now, as I said, as long we are holding these levels, these lows from the last week, I think that the US dollar could potentially see deeper prices, deeper wave B here. Okay. But if we'll see a recovery only in 3 waves, then we know that we will again immediately have to turn bearish on stocks. So that's more for like a short-term views. Okay, looking at the long-term picture here on stocks, as I said, potentially we could be making a flat correction for wave B, wave 2. Very important key big level, if we see a next sell-off after current minor 3-wave rise, would be 3800. If this one is broken, then we go to the second wave count, which actually shows that there is room for another drop to or beneath 2022 levels. I really like this scenario, because if that would come into play, then you know that a lot of media, especially from psychological perspective, stocks would be seen extremely bearish and pessimistic, and normally we know that that's the opposite signal. So for now, as I said earlier, we are somehow trapped in the range. Multiple scenarios are on the table, but when we rise, if we rise and make a daily close above this level, swing back from August 2022, that's when I think that these things could become very, very interesting. Now, I'm looking also at some single stocks. I can see that plenty of some very interesting setups like Netflix, Apple has very nice bounce as well. So I think that even Coca-Cola, that I was tracking it as well lately, is coming into interesting area. So some of the single stocks, if you're very selective, could have some interesting bullish formations actually. Also, if we look at Dow Jones, you can see here also a corrective movement from the high. I'm not really sure if bottom is already been in place here from last week, or are we going to see a retest of the lows. What I'm watching at here is actually the ideal support would clearly be at this swing support when go back to November, and yes, early November and November 10 levels. You can also see that there was a nice volume here, probably one of the strongest here when looking or comparing to the last 3 months or so, if not more. And normally when price will retrace back to this area, it means that probably there were a lot of important buy positions executed, and if price will retrace back into this area, then we know that this clearly was important. So that would be the ideal scenario, but I'm aware that there can be even earlier low here to be put in place. But from a poor Elliott wave perspective, the ideal support is much lower, especially if you compare wave C to wave A. Also, there's even an alternate scenario that this could be a WXY formation where you're now correcting in wave B. But even this one then suggests that maybe a 3-wave rise minimum could be in the cards here for slightly higher prices this week, okay, after the next pullback. So if you're maybe more like a short-term trader, the important level that we should track is definitely this low. So as long as this one holds here, there can be some buying opportunities on the next ABC pullback. Okay, the supports obviously would be at these previous broken swing levels, as I said earlier, because notice that this was a very massive breakout here. So if that resistance, which was a wave 4, did not hold, in fact we have seen acceleration higher, then obviously this could turn into a very nice support. Keep in mind that there's also 4,000 level, which also, as you know, is a very important round figure. So as long as we are above that level, even if the recovery will prove to be corrective, I think that there is room for slightly more upside. And during this time, as I said, US dollar could potentially see more weakness. Euro dollar consolidation from 105 could resume even higher. So since I mentioned also euro dollar, let's take a look. So euro dollar is, in my opinion, in a corrective rise. I think that this wave B can be a very tricky one, and the reason why I'm looking at this to be as an ongoing correction, and that we could still retest this 104.90 area, or even lower, is because this first lag from the lows was in 3 waves. Okay, and the previous was a very strong drop actually. So if I respect the substructures, okay, then we know that this should be a correction. But sometimes corrections are not just simple and fast like this one, especially when you had such a very strong drop or reversal from the highs. Then usually these corrections could be much longer than this, than only just a simple ABC. So I'm aware of something more complex here, maybe even deeper. But the idea is that this was that the first rise was only in 3 waves, okay, from the lows. So either it's a completed correction or a part of a complex correction. As I said, I think that can be part of a complex correction. Also, 38.2% is still a little bit higher. There's 107 first resistance. More importantly, could be 108. Okay, we talked about this also last week. It was the US CPI high, so maybe this one could be even more important. But overall, this is not very easy to follow at the moment, because always when you are in a complex corrections, there are different possibilities on the table. But if we look maybe from a distance, still the big picture did not change for me. Okay, I think that from 2022 lows, we have 5 waves up. We completed this first impulse. We are now in a corrective stage, and that sooner or later this recovery will resume. So if you're a longer term investor, maybe this current short-term swings actually doesn't really matter. Also, when it comes to euro, maybe higher degree picture, I still think that inflation obviously will come to the downside. We have seen some very nice peak of inflation here. There were some ECB comments coming out today that ECB members Holzman is calling for 50 basis point hikes at next 4 meetings. Okay, so this is very hawkish actually, and if inflation has already peaked, then obviously further hawkish view could help to bring down this inflation. And obviously on the opposite side of this, if we keep going to see strong euro, this will definitely help to bring down inflation as well. Also, when looking at the big picture for the euro dollar, I think from an Elliott wave perspective, I think that the very nice low could be put in place here, maybe even multi-year low here at the 78.6%. But always, I really do not like to make any big calls here, but I'm just aware that potentially we could retest this upper channel, and then if we see a successful breakout, we know that this could drive the euro even higher. And one reason why I think that multi-year low could potentially be in place here is also when looking at some cycles on bonds. Let me show this. And euro dollar futures. It's not the euro dollar currency rate, okay, it's the euro dollar futures, which actually it's the instrument which is a ticker that tells you how many dollars are there in banks outside of the US. Okay, of course, what we are seeing at the moment is that there's still plenty of US dollar obviously held in the banks on outside of the US, but notice that this cycle can be coming into the end. Why? Because looking at these very nice cycles, it looks like that we have the multi-year or decade cycle. Actually, when looking at the red ones, you can see that we are now approaching the end of this current phase. And then we have also multi-year cycle. So that on the red is the decade cycle. Here is the multi-year cycle in green. You can also see that we are approaching the end here. So it appears that a very nice potential reversal could be setting up because we are in the late stages of this trend. And obviously this makes sense if we consider that the US yields could potentially be approaching the resistance. Of course, Fed is preparing to stop the hikes probably this year. And if that would be the case, there will be less interest to stay in the US dollar on other banks outside of the US. Okay, so I think that this could be a very interesting bullish case for the euro. I will show you just one more thing, because always when this cycle, okay, here on the euro dollar futures came to an end afterwards, we have seen a very nice and explosive move to the upside on the euro dollar. Now, firstly, here back in, of course, that's back then we haven't had the euros yet, but it was obviously adjusted to the euro currency after the eurozone changed the currency, and you can see that afterwards we have seen a very nice push to the upside, right? And also here, when this channel was broken, that's when we had this very nice confirmation that the rise is here on the euro dollar, because after that the new changing cycle already started. Here again, it was in 2006. Okay, we have seen the euro dollar already recovering, then euro dollar futures also turned to the upside, and euro dollar just continue even higher and make them very nice and explosive move to the upside. Now we have a very similar situation. I believe we broke this downward channel, similar like it occurred here in both two examples in the past. And now from Elliott wave terms, as I also showed you, from the lows, we have very nice impulsive qualities. And this cycle now is again coming to an end. So I think that we have a very nice potential, big upside potential here, the euro, in my opinion. Also, as I said, the US yield. Okay, let me just. The US yields here are also coming into the potential resistance because of, which makes sense of what the Fed is planning, right? So, well, obviously, we do not expect that Fed will go with rates towards 10%. I think that sooner or later they will obviously stop, and this will then have an impact on the on the markets as well. Okay. Okay, so that's why I'm also thinking that euro dollar, not only from an Elliott wave perspective, but also from this perspective that I just described, has a very nice upside potential. Now let's take a look on cable. Okay, Scott, I can see some of your comments. I will check them later. I cannot go into the details because it takes a lot of time, obviously. So I will check this later. Okay, now cable, nothing has really changed since last time. Okay, what we are seeing is that potentially we are here making a flat, maybe even trapped in a triangle if this support level at from start of January will stay in place. But overall, I still think that this is a temporary corrective move. I really doubt that we will see any retest of these lows here when go back to September 2022. So I think that this capitulation here really is an important signal for a bottom in place. We have a massive volume back then on this, some of the ETFs as well. So obviously this very strong important volumes occurs at the end of the trends. And this also, looking at this technicals, head and shoulders bottom formation could be playing out now in the right shoulder. So I think that sooner or later we will see again pound recovering. And as I said, on the 4-hour chart, we have a very nice potential complex correction going on. It's not really finished. Now, from a trading perspective, what would be the best outcome is that we clear out stops beneath this level, 1844. Okay, we see maybe a break out of this triangle consolidation. We know that moves following the triangle are final in the sequence, so this could be setting up for a very nice bullish reversal later on. Okay, so if we can break this 1844 and then we rally in 5 waves, then I think that we would have a very nice short-term pattern that would suggest that we are headed even higher. If we're just chopping around and not going to see a retest of this level, then unfortunately we will have to wait a little bit more until ABCDE formation is fully completed. Okay, so cable short-term not really clear. Longer term, as I said, I think that more upside could potentially be seen. Now let's take a look on Aussie. So expectations are for rates to be lifted to 3.6 from 3.35%. RBI has been hawkish and looks like that market is not buying this hawkishness. Somehow it's more like a dollar move, it seems. But looking at the whole price action, I still think that interesting support could be seen here at the former wave 4 as we talked last week. So far you can see a very minor choppy price action. Normally that looks like a consolidation, so I would not be surprised if we see a final drop here in the next 2 weeks or so, and then potentially setting up for a bullish case. So Aussie looks very attractive maybe from a long term perspective, especially if we can break and retest this wave 4 and then reverse to the upside. Looking at some bigger pictures, notice that last year we bottomed here at the 61.8%. After we broke this trend line, then we come back towards this trend line, and now this could be also, as you can see, very big right shoulder. That was a left shoulder, and that's a hat. Okay, and even on a smaller or a closer look here, you can also see potential left shoulder here, right shoulder, potential hat. Okay, so I think that later this year, Aussie, in my opinion, could be much higher. Okay, let's take a look also on dollar CAD, because we have Bank of Canada raise decision as well. So Bank of Canada is expected to stay on hold, unchanged. The inflation came to the downside, and then they've been repeating this in the past that they are going to slow down to stop the hiking pace. So it's not a surprise that CAD is actually trading lower. Looking here again at some of the daily counts, I think that this consolidation could potentially be wave 4, and we are breaking higher into the wave 5. Now looking at the intraday chart, I like this ongoing recovery. It looks like we have these 5 waves up, not really perfect 5 waves up, but I think that this 5 waves shows potential direction of uptrend that could resume, especially if we are going to see here a triangle or as a whole correction or a triangle in a wave B. In either case, I think that there is room for more upside after the current correction or pullback is finished. Now, ideal support obviously would be here at the former wave 4 around 135.15. Also, at the same time, we have to observe what the crude oil is doing. Crude oil came to the upside. Okay, so if we look at the crude oil, which came to the upside on Friday after the first spike to the downside, on reports that some members could leave OPEC. So, of course, this was later on, I believe, marked as untrue. So that's why we have seen a very nice or strong reversal to the upside here on crude oil. But looking at the whole picture here, still we are just chopping around, not really seeing any clear trends. And normally when that's the case, I will try to go with the direction of a higher degree. And we know that crude oil before that came very sharply to the downside at the end of the last of 2022. Actually, for the whole 2022 almost, we have seen a very nice reversal to the downside. So I think that we are just now in a correction, and that we potentially could stabilize this year around $62. Okay, so there is still room, in my opinion, for more weakness. I know that this wave 4 could become even more complex, so it will be important to track potential breakdown levels. Of course, the most important one would be this broken trend line. Okay, so it's a pretty unclear situation at the moment, but let's assume that we are in a wave E, final leg of this wave 4 triangle. Then very nice resistance should be around $81. If we cross 80 to 90, then I think that wave 4, as I said, could be even more complex here. Okay, so it's very, very tricky at the moment. But if at some point crude oil, let's say, that will sell off from 81, or it stops just above around that upper triangular resistance line, then I think that this could be supportive for dollar CAD, because CAD is obviously correlated with crude oil. Now let's take a look also on someone asked for Bitcoin. Yes, I will look at the Bitcoin as well. I can also make a quick look at dollar Mexican peso, no problem. Okay, so dollar yen, this one also should be very important this week. We have on Friday or Thursday Bank of Japan policy decision. So let's see if they will give us any hint of maybe new adjustment of their yield curve control. If there will be no any changes at all, then this would be probably seen as bearish for Japanese yen. Okay, but if they somehow will maybe give us a hint that they are ready to act if needed, then this would potentially be very bullish for Japanese yen, because inflation, as you can see here in green, is coming to the upside here. So they could be forced to act there. However, they said that they believe that current inflation is only temporary, but we know this story from other countries back in 2000 and 2022 at the start, or at the end of 2021. We know that they were repeating that this is inflation is only temporary, blah blah blah, and afterwards they realized that that's not the case, and they were forced to act. And maybe this could be something similar going on now as well with Bank of Japan. So we'll see if we can seize any kind of impulsive sell-off. For now, that's not the case yet. Potentially, we are moving into this resistance 38.2%. You have the 50% that comes in right into this swing resistance, which could be also the left shoulder. So this somehow goes very nicely with the dollar index as well, or with overall dollar view. I think that we have a nice downside potential here for third wave sell-off, and at the same time, obviously, I would expect the dollar index would make the similar move. Okay, now we are all corrective phase, even the euro, pound, Aussie, everything, everywhere I see corrective phases. Of course, sometimes those can be very simple, sometimes they can be very complex, and they can last longer than you think until they are finished. Okay, but overall, I think that if we get some nice sell-off on the 4-hour charts, let me see at some levels here. Now, first support at 134, resistance is at 138. I've been talking about this one as last week in last week webinar, why it's important, because you have here on futures, and futures, you have this gap where we had this rollover contract. So obviously around these dates you will see massive volumes, important position adjustments, and that's why I think again could be very important key level for a new reversal if the price retraces back into the same area. So I think that this goes very nicely with the dollar yen to around 138. Okay, so that's why I think that this could be very important resistance. If we see a 5 waves down from there, of course with some micro sub waves will be important to track, then I think that would be a very nice potential short-term opportunities on the short side. Okay, for now it's still an uptrend, so we just have to be patient. Now let's take a look also on Aussie Kiwi. I think I covered this one 2 weeks back. So Aussie Kiwi has a pretty nice wave structure here. We have seen a very nice 5 waves down at the end of 2022, then a 3-wave recovery that took us back into the area of a former wave 4. You can see a very nice and strong sell-off from there, clearly below this trendline support. So I think that's an impulse and that we could see more potential weakness. I even prepared this hourly count here, and you can see that this could be counted as a 5 waves down. We broke this channel, so I think that's a wave A now. We could be maybe ready for some more weakness into the wave B or some tricky price action here, but overall it's important to wait and see these 3 waves of recovery before we may say that this market is going to see more weakness. Now ideal resistance obviously is always at the area of a former wave 4. There you have also the 50% and the 61.8%. Okay, so this zone up here, I would mark it like that, is key resistance for the next sell-off. So 109.40 up to 109.80. I think it's a very interesting zone up here. Okay, of course, if we see this wave B, that's the first thing we have to see, because then it will be much easier to project the end of a wave C. Okay, because we will be able to use the FIPS from wave B as well. For now, that's probably still a little bit too early. Now, let me check my list here. Okay, we can also take a look on gold. Okay, so big picture for gold, still bullish in my opinion. As long as we are trading above 2022 highs, I think there is more upside potential, especially if the US yields are really, let me check something here. Let's say that US yields are already in a wave 5 and then we see a reversal to the downside. This would be very supportive for gold, because dollar would see a sell-off. I really like how gold overall, how strong it is if we consider that US yields somehow were able to recover quite nicely here in the last month or two. So if US yields are going to see the limited upside, then I think that gold will sooner or later break even higher. So that, in my opinion, was a flat correction, ABC, very nice pattern, and we could see more upside. Of course, after this pullback, there was a first support that held pretty well here around 1800. We have seen a nice recovery, and I think that there is the key area where the decision will be made around 1870 to 1890. Okay, so you really want to see this zone to be broken, because I'm just aware that this could be another wave B, especially if the subdivisions will show us a corrective look from the recent low. So I will track the intraday subwaves very closely, and of course would be leaning towards the bullish potential setups if we see 5 waves up from that recent lows. For now, that's not 5 waves up yet, could be underway, but definitely this is what I want to see to make sure that wave 4 has finished. Okay, so I will have a very close eye on this one on the next potentially bullish setup here. Also, can we look at silver? Yes, we can look a very quick one here. So silver, I mean, short term maybe not that clear picture. Longer term, in my opinion, it's much better. I mean, we had a pretty nice, very strong recovery here going back to 2022, no, 2020, and we have seen a massive break above these previous swing highs, and now we came back to those levels, found a potential support. So I think that there can be set up for a bullish, for more gains here. Of course, there can be even a surprise and retest of the 1750 area, but I really doubt that we will see any kind of a revisit of 18.50. I think that this low is in that, and at some point we will see much more upside on silver. Of course, this, as you can see yourself, could potentially even be some kind of a complex correction. That's why I'm repeating that this level down there is very important. So for the short term, it's maybe quite tricky, because after all, we have seen a very strong sell-off here, and I'm not really sure if that was end of the correction, or are we going to see only wave B rally. But at least in the short term, maybe the resistance around 38.2 to 50% could be retested, and then let's see what happens from there. If we go again, same with gold, with 5 waves up, then we know that we could be looking for or expecting much further upside. But as it looks right now, I mean, I really don't have any kind of a strong conviction here regarding the silver. But if we see 5 waves up, especially gold, that would probably be my favorite one to track. Okay, now let's take a look also on dollar Mexican peso. Now, dollar Mexican peso, if you've been watching our analysis last year, then you know that we've been very bearish. We've been looking for more weakness on dollar Mexican peso, and so far we can see a very nice strong sell-off. Of course, one of the reasons is rate differential between Mexico and the US. So so far we can see a very nice explosive move actually to the downside. So I think that wave C is in full progress, and we potentially can expect that these swing lows here, when looking back 2017, 2016, could be retested. Of course, looking for any setups here at these current levels, in my opinion, doesn't really make sense. You want to see some kind of a pullbacks. Now I'm looking for this to be wave 1. You had a wave 2, and then this could be potentially counted as a 5 waves down for wave 5, and now you could be expecting that wave 3 has bottomed, and that we'll see a rally into wave 4 and then more weakness. Okay, so I think the next 3 wave bounce could be potential short opportunity here on dollar Mexican peso, until we revisit, as I said, these swing lows, in my opinion, here, that could be retested in the upcoming months, if not weeks. Now let's take a look also on Bitcoin. Okay, so last time when we covered Bitcoin, we said that potentially we are at the resistance either for wave 5 high of a potentially first impulse, or maybe even of a flat, and in either case we can expect a reversal or limited upside and pullback, especially because dollar was still strong. And so far we can see a very nice reversal down, but looking at the subdivisions here, it's some kind of a very slow price action. So if we can hold this 21,400, then I think that even this wave 4 could still be underway, potentially as a triangle. Okay, so that's one scenario. The second scenario is that we are potentially in a flat correction, and we will see support around 20,000 to 21,000 in that area. So as you can see, we'll be expecting more upside on cryptocurrencies, on Bitcoin, and especially because I think that dollar index is somehow I'm tracking their correction, and I know that when dollar index will hit resistance, will complete this corrective rally, that's when cryptocurrencies could have a very nice recovery, because after all they are holding up quite well, especially if we consider how stocks have been trading lately. So I think that we are now in a corrective phase, not really seeing any kind of a bullish setup at this stage yet. But I think that there can be a very nice potential, interesting formation on Dash. We covered this one last week. So back then I said that potentially we are going to see a wave 4 pullback. So far we have a very nice pullback. Notice that we are coming down to this 38.2%. We are still trading above this trend line, which could be ideal support as well. And there you have wave 4 that equals to wave 1 in that area. Okay. Now, if someone want to be placed on the long side, of course, I always recommend 1-to-1, no margin trading, then or leverage. Then, of course, invalidation level should be your wave 1 here. Okay, if you're a more short-term trader, then what you want to see is probably a 5-wave recovery or an impulsive reaction here above this swing zone at around 70. Okay, so probably I will watch this one very closely. If we can make, let me label the subdivisions, this kind of a bounce in 5 waves. Let me label this. Okay, if we see something like this, then I think buying pullbacks could make sense. Okay, so because obviously then you will have enough of information from a price perspective that wave 4 has bottomed. Okay, because you never know if you just buy here how deep we can go. Of course, obviously, if you know your risk, then that's the different story. Okay, it's not too late. We have the recording, so no problem. We covered Dow Jones Industrial Average earlier. So if you will watch the recording, then you will see it. Okay, it was at the start of the webinar actually. Okay, what we have else? Ethereum Classic. Let me just find it. We also published the idea here on TradingView as well for this one. And the reason why we picked this one is because I always, when I'm looking at some of the potential setups, we try to focus on the markets that has a very clear price action. Okay, I don't want to mess around with some very tricky structures from Elliott wave perspective. So let me. Okay, so here is the wave. If you're familiar with the Elliott waves principle, okay, you know that markets moves in 5 waves and 3 waves, and 5 waves are impulses. So always when you see very strong reaction from the lows or from the highs in 5 waves, then you know that direction has changed, either from bullish or to the bearish, bearish side. And you can clearly see here that on Ethereum Classic we have a very nice 5 waves up, and now you have these 3 waves down. Okay, because these 5 waves represents an impulse, and corrections, pauses, temporary moves are made by 3 waves. And you have a very nice support here, the 61.8%, the 50%. That's the area from where we would expect a bounce. So I think that this is a pretty nice, very bullish formation. Invalidation level clearly should be at the lows. Okay, so as long we are trading above that level, I think that there can be that we can actually revisit this 25. We will see later on if that will be a wave C, wave 3. We don't know that. We just know that from minimum perspective, if that's a correction, then this correction should be fully retraced. Okay. Also, if we look at ENJIN coin, this one also, or this one. No, or this one. Okay, I'm not sure why the wave count it's not showing up right now. Anyway, now ENJIN coin, if we look closely here, we have the potentially impulsive bullish move. Okay, and now the counter trend is again in 3 waves, and looks like that this is an ABC potential flat formation. You have a very nice support right here at these swing levels. More importantly, normally wave C will try to bottom at the area of wave A, which is right here. So again, this one has a very nice, beautiful reversal pattern. But again, in validation level, as long you cannot identify where that the wave C has ended, the invalidation level obviously remains here. If you're going to see very strong impulsive reaction, and let's say we break 50 cents, then you could say that wave C has ended and that we are headed higher. Okay, so this one, in my opinion, is also very, very attractive for. Okay. Okay, traders, I hope that you enjoyed this video. It's been 45 minutes now. That's the usually time that we cover the webinar. So if you have any further questions, anything, please try to leave it on the, I think you can leave it in this chat, or if you're watching this on YouTube, below the video as well. Make sure to like, to subscribe to our videos, and I will catch you with new ones, fresh updates next Monday as well. Okay, traders, have a good day. Bye.